Hi everyone, I'm Natasha, the CEO of Cable, and I am back today speaking to Julie O'Connor, the Chief AML and Fintech Risk Officer at MVB. Thank you, Julie, for joining me today.
Thank you for having me. Looking
So
forward to
let's
it.
jump right in.
Okay.
And I'd love to understand what drew you to the compliance space initially.
That's an interesting question because I'm not sure I was drawn to compliance. I think it found me, to be frank. I graduated with an accounting degree and went on to get my CPA license. So I had every intention of going into more of the audit, accounting, finance side of banking. However, as fate would have it, my first banking job out of college was a community bank. While I was working on my MBA and getting my CPA license, that particular institution tapped me within a month of beginning my first real, career job to be their BSA officer. And so that really was the beginning of my journey into AML compliance and risk and compliance in general. Within a couple of months, I went to boot camp. This bank did not really have a BSA program. Now, this was before 9/11, this was before the Patriot Act. And so a lot of banks didn't have the programs that you see today. Really set out on the journey to build the program for this bank. And then from there, realized how rewarding it was and fulfilling to build a program that was effective and kind of caught the bug at that point and became very interested in AML from then on.
You know, it's very interesting. I asked this question to a lot of people, and almost everybody has a similar story to you, including myself. I have a law degree, and then I became a chartered accountant, and then was asked to deal with financial crime at my first bank. And so it's interesting. I wonder if there needs to be some kind of university degree or some kind of career path that is actually identifying and picking people and training them specifically for AML and risk management much earlier. That's very cool. And you've spent most of your career at banks, but you did spend a good number of years, I think 8 years or so, at a fintech. So talk to me a little bit about the differences between working at a bank and a fintech and then coming back to a bank, which is often not what happens. Often people go from banking to fintech and then stay in fintech.
Another great observation. So for me, I was in what I would call traditional banking consulting work as well for about 12 years. And then I worked with another non-traditional company in Tennessee when I lived there to really stand up their corporate governance for their bank holding company. They were a student loan issuing company. And so I found myself gravitating a number of times to more non-traditional companies that want to get into the banking industry. So I slightly consider myself to be somewhat of a change agent or a transition type agent in companies that want to enter this space. And so with GECO, I was the number 4 or 5 hire there when they began their journey. And so we were the first fintech to acquire a national bank charter in 2020. And from there, really drank the fintech Kool-Aid, if you will, at that point. Loved it, the energy, all the things that go along working in a fintech. And then for me, having been in banking the majority of my career and even in my consulting stint working with banks, problem banks primarily, it just made sense for me at that point in my career to say, hey, I really want to pivot to a bank again, but I love fintech. And so MVB was a perfect fit for me because it's both. And that's why, it was an easier, I think, transition for me.
And how is that experience at the fintech really impacted now how you work with fintechs, but within the traditional bank infrastructure? Do you think that you approach the assessment of fintech risk differently to perhaps some of your peers who have not spent that time in fintechs?
Oh, 100%. There's no doubt. It changed me for life being at a fintech startup in that it really hardwired me to look for ways to innovate with tech and data. So I find myself at MVB always looking for ways to scale, to find efficiencies with data and technology versus necessarily just adding people to the bottom line. And I think that that 100% comes from the mentality that you have in a fintech startup, which has to be agile, fast-paced. You've got to be very dependent on your tech stack and what you can do with technology, because you typically don't have the budgets, of a bank even. So yeah, I mean, it definitely forever changed the way that I experience and look at compliance and risk management and how I apply the principles to it versus I think somebody that's never been in that environment.
As well as the efficiency gains that you can make using technology and the way that you might structure your team and your oversight, has it given you more empathy for what fintechs are trying to do you think? Because I often think, talking to bank compliance officers, they understand the need for the fintech from the bank's perspective. This can help increase deposits, or we can get fees from this lending fintech, or whatever it might be. But the additional benefit that I wonder whether you have from working at the fintech might be just an empathy towards the things that they have to deal with. It's a whole different set of problems than the stuff that a bank deals with.
Absolutely. Having been in a fintech for a number of years, I really can't put myself in the other person's shoes. The fintech client who is trying to scale their business, a lot of times with limited capital. And so you have to think about, how can I do more with less? And normally, they're very customer-centric. Fintechs are very customer-centric. They're trying to solve a problem. They're trying to make something faster, quicker, easier for the customer. A lot of them have, a aspiration to help a certain population of underbanked clients. A lot of the fintechs are doing that kind of work, and so really trying to think outside the box of a community bank mentality or a super regional bank, in that it's really bigger than banking. They have a bigger mission than that, and so really putting yourself in that client's shoes and knowing that they have limited resources, but this could be cutting edge technology that could really be a game changer for the industry. I think that I bring that to the table differently than maybe some risk professionals that have never been in that capacity or sat in the seat of a fintech, in a fintech company.
Yeah, I'm sure that the fintechs that you work with at MVB appreciate that view.
Absolutely.
So if we pivot and talk a little bit more about compliance specifics for a moment. So as you I guess firstly, it's quite unique to see a Chief AML Officer and Risk Oversight Manager. Often they are a couple layers down, don't have that chief title. And despite a lot of regulators talking about how your AML lead should report directly to the board or have that C-level title and authority and budget, you don't see it very often. So I guess my first question is, why do you think MVB took that approach, and how has that helped you in being able to do the things that you think you need to do with regards to your fintechs, being as senior as you are in the bank?
It's super critical. And it's funny you mentioned that, because I think there was another question in your list of questions that you gave me regarding where do I think AML officers will be in 5 years. And I think that what we're doing at MVB is trailblazing for AML officers. And that is it's 100% our board and executive oversight that made that decision to really elevate the AML role, to make the AML officer reporting to the board directly, which again, to your point, is not often seen. And many times the AML officer is buried 5 layers below someone reporting to the CEO. So it is definitely an outlier in our industry that we're doing things this way, but what it has allowed us to do is really have a voice at the table with the executive team. So I'm on the executive team and also reporting to the board, and it allows me to be able to demonstrate, the things that we need to do to be effective and to manage our AML compliance risk in the manner that we need, and to always have that seat at the table versus maybe going through 4 or 5 layers before it gets to the board. And I think if AML officers were honest, a lot of them feel voiceless and they don't feel like they're heard. amongst the board and executive team. And I think it's really important because if we've seen one thing in the past 2 years, especially in the fintech partner bank space, AML has been extremely scrutinized. So I think that, I thank our board for having that oversight and the foresight to say, hey, we want to do this differently. We want to really elevate this person. We want to elevate the role in the organization so that they get the attention that it needs and the budget it needs.
Yeah, that's brilliant. Certainly in our experience at Cable of talking with a lot of BSA officers, of course, the regulation says that they have to have authority and budget to manage their risks appropriately. But our experience is that actually is not true very often. And so really having that C-level title must make a huge difference. Yeah.
It's true. And I think if I could just add one more thing, I think it's important also for AML officers to see themselves in their org as more than a cost center. Look for ways to drive value to the business, drive value to the company, and not just be adding bodies to look at alerts and do the routine things. Like really be thinking about what truly matters most. What are we looking for? What are we trying to prevent? What are we trying to stop, and focus on that versus just routine check the box. We're looking at this, we're looking at that. Well, what does that all mean? And by the way, are we missing blind spots that we're not even thinking about? So, those are ways that AML officers can elevate themselves, is to find a way to become a value to the company, not just a cost center. So I think it's seen as a cost center way too often.
Yeah, I love that. That's great. That transition certainly needs to happen for compliance generally, as well as BSA.
Absolutely.
And that leads on to my next question, which is, I guess, a lot of the regulatory scrutiny and a lot of the consent orders have mentioned the same group of risks with regards to banks working with fintechs. A lot of the standard BSA AML stuff around CIP and risk assessments and transaction monitoring. Do you think there is an overlooked regulatory challenge that banks face when they work with fintechs? Or I guess said another way, what is a less talked about regulatory challenge or risk that you see with regards to bank-fintech relationships?
Yeah, I think that, one of the overlooked areas or risks that is probably, not getting to know your partner, not getting to know the partner, not understanding the business, not understanding the industry, because it's far more than checking a box. It's far more than saying, that's a great idea. We can build this tag. We can do this. We can do that. Well, anyone can do that. All right. Any partner bank can do that. What's, I think, more rare is to really understand, is this the right fit for both of us? Is this, is this idea a right fit for us? Is it a right fit for you? Is it a right fit for our regulatory environment or for our risk profile? And then from there, being able to really, looking at the complexity of the regulatory landscape that we're in today with fintech partner banks. And I think at the end of the day, it's all very uncertain, right? Things are changing today by the day. So really understanding things could change in 2 years, thinking forward, trying to be strategic. And okay, it could be okay today. Is this going to be okay in 2 years for all of us? So I think that is an overlooked risk, is the lack of strategy, foresight, and relationship building with the partner to fully understand, is this a right fit for all of us?
I think that's very true and a really good point, because a lot of banks that started getting into these relationships did so with a very short-term, deposit maximization view, or, how do we get more fees right now? And I think it surprised a lot of banks when some of these fintechs failed, and when they had to figure out how to deal with the customer data, how they offboarded a fintech, and probably also because of your experience with your fintech, you may have been ready for this. But what if a fintech pivots? What if they decide to launch a new product to a different type of customer base? And really understanding those strategic options that a fintech has and how that might play a part in the bank's long-term strategy. Yeah, as you say, super, super important.
And being able to stress test your capital, your liquidity with that fintech in mind, how, different scenarios, if this client does this, how does it affect our capital or liquidity? And to your point, I think 6 years ago, some of those things weren't necessarily thought about as much just because we didn't have the battle scars that a lot of partner banks have now.
And this really gets at how reactive banks can often be with regards to their fintech. They wait for a fintech to do something or for something to go wrong, and then they try to fix stuff. And I think that's probably a broader commentary on compliance more generally, as well as specifically in bank and fintech relationships.
Yes.
So I'm interested in if you've seen or if you're trying to make any shifts to being more proactive with regards to compliance generally, but also bank fintech relationships, and if so, how you're doing that.
Absolutely. And I think that we're seeing a shift across the industry, partner banks in general, shifting to be less reactive, more proactive. And I think, again, the past 2 years, going back to, Q4 of 2022 to today, we've seen consent order after consent order, all similar themes, right? So I think that, yes, that all banks in this space have to be thinking about what they're doing to be more proactive because there's regulatory scrutiny, you have evolving threats, you have technology that continues to be advancing that we're using it, but so are the bad actors as well. So we've got to keep up with, we need to be one step ahead of the bad actors who are also using AI and emerging technologies to do bad things with it as well. And I think, technology, data analytics, sharing information, that really wasn't happening 5 years ago. There wasn't a lot of sharing information between partner banks. And your company, by the way, is doing a great job to pave the way, I think, for that effort of, we need the data, we need the information so that we can do our jobs too. And that's how we will be more proactive, by using tools and technology like cable. So, I think there's a shift. I talk to so many CAMLOs in the partner bank space, and everyone is like, how can we get ahead of things?
Yeah.
So,
yeah.
Yes.
You mentioned there sort of, like new types of crime, new types of money laundering, new types of attack vectors that criminals are using. Is there any specific new typology that you're seeing across your fintechs or the bank itself that is, new and interesting, and you think is something that people should be paying attention to now?
I think that what we're seeing a lot of is, surprisingly, there's a lot of elder financial exploitation. That seems to be a huge attack vector. And then just the traditional business account takeover. That continues to be, one of the top fraud trends that we're seeing as far as money laundering goes. And money mules have become a big threat as well, and they're very hard to detect because money mules may have credentials that pass CIP with no problem. So you can onboard a legitimate person who plans to do bad. How do you prevent that? How do you get ahead of that? So there's a lot of great technologies out there now that are able to try to pinpoint, a bad actor, but, criminals are becoming smarter and they're using better technology every day. So there are a number of trends out there that we have to stay on top of.
I think that money muling, which you specifically called out there, is something
Yep.
that we're definitely going to see more of in the US.
Agreed.
When I was working at Monzo Bank, it was something that we saw a lot of, and it was very much because of the faster payments that you have in the
Yes.
UK. And so as real-time payments becomes much more common here, I do think that that's something that compliance officers are going to need to figure out how to get on top of. And it's interesting now because in the UK, they're starting to think about how they can put delays into payments again. It's like they've kind of gone full circle, and the US is 4 or 5 years behind or more on that trend. So it'll be very interesting to see if the US can learn now from the risks that the UK has seen and really get into real-time payments with those controls in place already, or whether they have to go through their own learning cycle.
Absolutely, because, the faster the payment, the faster the fraud. right? So yes, agree.
Yeah.
And we have to be one step ahead of that.
Yeah. I want to come back to this concept of you being a chief AML officer and getting buy-in and working with the rest of the bank. I certainly found that one of the hardest parts of my job when I was head of financial crime was raising those wins to the board, making sure that I wasn't just in front of our C-suite when things were going wrong and I was having to explain what we were doing to fix it. It was, how do you get those really great things that your team is doing visible at all times? I wonder what you see as the hardest part of your job from a compliance perspective.
I think the juggling act that we do as, a Chief AML Officer in Fintech Risk, it's the different parties that we need to be able to keep happy, from the partner who, paying fees to the bank, to their end users who are oftentimes our customer, wanting to make that a good experience for them. The regulators, maybe one of the most important groups that we need to keep happy, the shareholders of the company. So again, driving that value to the shareholder, bottom line, the CEO, the executive team, and then also our internal group, our internal teams, that we don't want them to just constantly feel like it's a fire drill. Every day's a fire drill. Like, they want to have meaningful work. They want to feel good about what they're doing. And to your point, not feeling like that they are only there to prevent a problem, but they're actually, and I just can't say this enough, driving value to the bottom line, driving value for the regulatory environment. And so celebrating those wins for us are easier, I feel like, because we are finding ways to drive value for all of those groups. And so it just makes my job easier. But I do think that is the most difficult part of the job, is managing the groups that we have to serve.
Yeah, that makes a lot of sense. If we look forward now, the finance world is changing so significantly with AI. There's lots of talk of agents being able to make payments on their own, and it's going to completely change how money moves and also how banks think about compliance, I think. And so with that in mind, how do you think the roles of a chief AML officer or a risk officer will actually change in the next 5 or so years?
I think that they are going to be much more complex roles than they have ever been. And that's due to the technology alone that you must use and harness in order to drive value and to scale and to maintain your effective compliance. I think the days are long gone that you just add people and people and people, and you have to figure out a way to scale your business, which is AML compliance for us. You've got to be able to scale without adding FTE. So I think that the chief AML officers of tomorrow, 5 years from now, are not just compliance officers, but they're also business leaders in some regard, because you have to think more strategically of how you are adding value to the company, and not just more layers of people to maintain your effective compliance. And I think because of that, it's going to make the role more complex than maybe in the past.
Maybe they will need to be both business leaders and technology experts.
Yes.
Because if money is moved in a totally different way, and
right.
there are different payment rails and there are different
right.
Different protocols, then understanding that feels like it will be very important as well.
Yeah, I think that's a critical point, is understanding the industry of which you're in. Because it's vastly different than traditional banking, payments, even, we've not talked about it, but cryptocurrency. I mean, that's a new frontier too. So what's going to happen with that in the next 2 years, to be seen. But you need to understand the industry and the business is super critical.
Yeah. Awesome. Well, last couple of questions.
Yeah.
To get to know you a little bit more, Julie.
Yeah.
Tell us what you read to keep up to date with compliance. How do you stay on top of trends? How do you keep up to date with industry changes?
So for me, regulatory guidance, I'm looking at, FinCEN, FDIC, SEC, CFPB, all the pronouncements that come out, and I'm subscribed to all the alerts so that I can get real time, governmental issuances, and then also, of course, industry publications, podcasts. I listen to a lot of podcasts, and I like to get everyone's point of view. I may not agree with what everyone else thinks or opinions, but I do like to hear different ways of looking at things. Also, I think LinkedIn is a pretty great place too. A lot of folks that I respect that, do a lot of writing on LinkedIn, and I like to read those again. May not always agree, but I like to get the thoughts, and it makes me think too. But maybe most importantly, one of the places that I find very beneficial is I belong to a lot of different CAMLO groups for peer banks in the fintech partner bank space, and we meet once a month, and that's been fantastic just to get other ideas and talk about what we're seeing and hot buttons and trends and regulatory issues. And that's been a great way to not just to talk about what's coming down, what's coming, in the next few months, but also like, what are you doing with what's presently an issue today? So that's how.
Awesome. And finally, what are you doing when you're not fighting financial crime?
Oh, I know. I have a 10-year-old boy, so I spend a lot of time with him, and he's basketball and soccer, so we're quite busy with that. But it is a priority for me every day, to find an hour and a half to work out, and that is how I recharge. Because I think energy gives energy. You give energy to get more energy, and so that is just a part of my daily routine, and I don't like that. That's not something that I don't do every day. It's just, it has to get done. And I enjoy it. And that is a great way for me to recharge, is a good workout, strength training. I go to cycling class here in New York City, so it's important for me to do those things.
Good for you. More disciplined with your workout than I am. Julie, thank you so much for joining me. It was
Thank you.
I really
Same here.
Really enjoyed our conversation.